Rahul Shah as well and figure out what he's making of the market right now. Rahul, hi, good morning. Seems to be a lot more about earnings, especially given the market construct yesterday. Everything was earnings related. I mean, be it an AB Capital, a Can Bank, BHEL, L&T. What about the numbers which came in post-market hours? Anything that stood out for you, be it a Swiggy or an ITC?
Hi, good morning. I think where the markets have been, and I think the earnings seasons have been so far has been good, and I think there is no disappointment in terms of where the markets can talk about. So I think most of the Nifty universe, maybe there are no disappointments. So I think the earnings seasons have been far much better, and that's what we are seeing in the reflection in the markets, where the markets every decline has been bought, and this markets. Secondly, I think interestingly, I think if we look at the numbers perspective, I think all large majors came out with a good set of numbers, including IT companies, which were as per the street estimates, there was no major disappointment in it. Now, coming back to the numbers which came up yesterday, I think 2-3 numbers between the day for yesterday and yesterday. I think one is obviously L&T. L&T came up with a strong setup. I think that is one of the pick what we've been liking. Secondly, and we've seen this all these platform stocks, be Eternal or be Swiggy. We have seen that then it has been quite good in terms of the way the market's performance has been. So I think looking at the Swiggy's number, I feel that I think Swiggy could be one of the better bets going forwards. And I think way the recent little bit price correction also augurs well in this rally. And I think PSU banks again, Canara Bank came into a good set of numbers. What I feel is, I think there's a few stocks that I think post numbers, I think what we've been liking it.
Rahul, the consumption space, especially the FMCG companies, are the numbers in line with what the street was expecting, especially with respect to the volume growth impact because of GST? Many of them have been able to hold on to the margins because raw material prices were coming down, so they held on to the margins as well.
So I think most important thing to look at it, and I think in the most of the companies, if you look at it in the FMCG space where the numbers have been reported, I think there was a mixed bag. Few companies reported, I think muted, and a couple of companies like Lever and all reported us good numbers with a growth coming up back into both. Growth was visible in both the segment, rural as well as urban. So my sense, including Lever, including Nestle, if we look at both were the large companies where we saw this kind of a pattern. So I feel that I think post this GST cut, I think definitely that rural demand should come up very strongly. And I think the 2-3 factors, one is also GST's topmost. Second, I think we have seen a good monsoon across India.
And
it's also again a good side of it.
And yeah. Auto companies, you in a day we'll see the October numbers start coming in. The Vahan numbers seem to be very encouraging with respect to the kind of sales that we have seen in October.
So I think in autos, I think, yes, passenger vehicle and two-wheelers, strong numbers, what we were anticipating. And then we've been seeing that, I think, where the passenger vehicle booking also, which had happened from post-Dussehra, Diwali, and so on and on. So I feel that I think the numbers should be good. I think passenger vehicles, specifically, I think Hyundai and Maruti looks very strong in terms of this thing. In two-wheeler space, I think Hero, I think the numbers should be encouraging. And I think going forward also, this looks like that this entire next quarter also should remain strong for this entire auto companies.
Okay, so that's the take on autos and the overall consumption basket as well. Aditya, hi, morning. Your preferred picks from the consumption space. Let's talk about staples first. We've had numbers coming in from some of the major staples companies. Which one is looking more attractive on the charts from the likes of HUL, ITC, Dabur? What's looking good?
Morning, Sneh. Morning, everyone. Thanks for on the show. From the FMCG staples, I would like to go over the Colgate Palmolive. That is one stock which has actually seen a lot of correction and a good consolidation as well. And at the lower end, we are witnessing good volume-backed buying in the stock as well. So there is a bit of an accumulation going on in the stock at current levels. Given the fact that the stock is already corrected, risk to reward is in favor of going long in the stock at current levels. There is no momentum in any of the staple companies, so to say, talk about HUL, ITC, or Dabur for that matter. So in that regard, you won't see any immediate upside in these stocks. But yeah, these are good stocks to accumulate at current levels, hold on to them for at least a year or so. And talking of Colgate Palmolive, you could easily see levels of 2,400 on the upside. And once that is taken out, maybe 2,700 is also something that can be seen. Followed by that, ITC is also something which is looking quite interesting to me. At current levels, I'll be a buyer in ITC as well, with a stop loss just around 400 or just below 400 odd levels. And you can see levels of 450 to about 470 on the upside. So both ITC and Colgate Palmolive, these are two stocks that I like from the staples space. And one should buy and add them in the portfolio and hold at least for 6 months to about a year's time frame.
Aditya, Maruti numbers are expected today. How's Maruti looking for you?
So Maruti is something which has done its with a bit of an up move. It's entered into a consolidation phase. I don't see a big bang up move in the stock anytime soon. Rather, if anything, I see stock coming down closer to about 15,800, 15,600 on the downside. On the upside, 16,500 is a cap on the stock as of now. So I would not be a buyer in the stock. Rather, if stocks shows a bit of an up move, I would like to book out profits if I'm already holding on to the stock at current levels.
Okay, so that's the take on Maruti Suzuki. Kunal, weigh in on Cipla. The earnings came during the market hours, but all the important con call commentary that we saw was post-market, wherein the management has reduced their EBITDA guidance. It's been revised lower to 22.75% from 23 to 24% earlier. They also expect the R&D cost to increase, and they've also announced the resignation of Umang Vora, their MD CEO. So there could be some negative impact on the stock today. Your reading on the charts?
Yeah, I think maybe the last 4-5 days the stock price sort of factored in this kind of a expected price action, because we saw the stock correcting from 1650 1680 levels thereabouts to yesterday intraday wise. I think it touched 1520 odd levels. So I think a decent 120 odd point correction which has already happened for Cipla. And remember, I think pharma stocks largely are very low beta, so to move 10% 15% at times, these stocks they take a matter of 3 months or so. So I think in that anticipation, I would expect the stock to get back into a zone where it could tap into a strong support territory. At least it doesn't look like that there's major breakdown in terms of indicators. The only caveat over here is the rising volumes, because yesterday, of course, on the back of results and post results, we saw the volumes being one of the higher volumes on the day for Cipla as compared to the last, I think, 1 or 2 months of price action, volume action. So maybe if the volumes start to increase, then you might probably expect the stock to head a little bit more lower. But broadly, I would believe 1500, 1480 thereabouts should be a decent support for the stock.
Kunal, do you look at Sagility?
Yeah, I do track that.
Because we saw good volumes happening yesterday, especially delivery of more than 2% of equity happening in Sagility.
This is one of the best months in terms of volumes, Sajid, for Sagility. I think it's almost crossed almost 100 crores in terms of the cash volumes for the stock. It's trading at 53, 54, 53 kind of a mark. I think if I'm not wrong, again on the monthly basis, this could be one of the best closing the stock would probably have. It's an exceptional chart, not to say the least, because I've tracked the stock over the last 5-6 months, especially at a point when the stock was stagnating at 40-42 mark for the past 2-3 months or so. The volumes had dipped down, but then sudden influx of volumes and we saw the prices breaking out. That's a classical sign of the stock showing signs of absolute strength. The chart history is very limited for us to forecast on the more longer term basis, but then looking at the last, I think, 5-6 months of charts, the increased volumes for the stock in this month so far indicates that we are looking at a major breakout.
Okay, so that's on Sagility. Rahul, let's talk about some of these defense names. Now, defense stocks have done very well after that DAC news was announced, and it's been looking good for some of these stocks, but particularly BEL, BEML, new orders coming in for BEL. It's back-to-back orders. What are you liking among this space, and your view on defense, especially on the valuations front?
So I think, as you rightly pointed out, I think we've seen a very good run up in the entire defense as a space. And I think last year and a half, this is the sector where we saw the sector hitting against the previous highs and then just cooling off in last couple of months. And I think now the valuations are justified vis-a-vis which they had. I think most of the stocks have corrected anything between 10 to 15%, and some stocks are back again there. But then entire basket, what we like is, I think, obviously, as you mentioned, BEL remains our top pick with a superior performance, a strong order book, and the guidance. We believe that, I think, company with our top line growth of 20% in next 2 years, I think this will remain our top pick and it will continue to deliver with a good return ratios as well. Secondly, I think if we have to play at something like, I think, what we like in this space, which are expensive, but I think which have cooled off in this thing is, I think, Bharat Dynamics, which is one of our preferred bets in the entire play. So I think these two stocks remains, I think, and this defense as a space will continue, and one should definitely look at to have a allocation in a portfolio.
Okay, so that's the take on defense. Aditya, anything that you're liking from this space? Of course, BEL, BEML, we have news flow over there on the back of auto wins. How are these two placed on the charts?
Let's talk about BML first. Sneh, it does look interesting on the chart setup. After a good consolidation, we saw a good volume-backed buying in trade yesterday. My sense is stock can easily test levels of 5,000 to about 5,200 on the upside. On the downside, 4,200 is a good strong support for the stock. Good accumulation at current levels. Definitely, I would agree. Talking about BEL, it's more of a consolidation that we're witnessing in the stock from the previous peak. Stock actually turned lower, close to about 430 is where the resistances are at current levels. So I'd suggest that look at staggered buying in the stock and BEL. Stock can see slightly lower levels, close to about 390. But yes, from a longer term time horizon, it looks very strong on the charts and can scale past levels of 450 as well. But it's more of a staggered buying that I would suggest in BEL. BML does look interesting and can be bought at current levels.
Aditya, if some of the companies like Policy Bazaar or AB Capital, which were active yesterday, what's your take on them?
AB Capital has been going very strong, Sajid, and look at the kind of volume that we're witnessing in the stock, back-to-back high rise, high lows that the stock has been making. If you're already a buyer in the stock, I would suggest continue to hold onto the stock for a target of 360 on the upside, and with a downside support at 310, you can actually place a trading stop loss close to about 310. If you're looking for a fresh entry, just see how the stock opens in trade today. If you don't see a massive gap up, then yes, you can still go long on AB Capital with a target of 360 on the upside and 310 on the downside as stop loss. Talking about Policy Bazaar, that is also something which has been going very well for itself. And my sense is that this is also one stock which can see levels of 2,200 on the upside after a good consolidation. Stock has finally broken out in trade yesterday on the back of good volumes. So at current levels, you can buy the stock. First target will be 2,000, second target will be 2,200. On the downside, place a stop loss at 1,800. So risk to reward is quite favoring going long in PB Fintech at current levels as compared to AB Capital because we've seen a decent run up in AB Capital already.
Okay, Rahul, coming to you, give us a sense on the real estate names because Lodha and DLF, we've got numbers from both of them yesterday. Lodha, exceptionally good numbers coming in. The sales have been very strong, and DLF also not all that bad. In fact, there has been moderation in their top line and profit, but pre-sales they don't look too negative. What is your take on both of these counters and the overall real estate space right now? Because we see after a bit, the momentum has come back over here.
So I think if we look at the entire real estate as a basket, I think they have done quite well in last 2 years, and I think this quarter also the numbers what they have been reported, or the companies where the quarterly updates also which have come, I think they have been pretty strong. I think in terms of in line what the street estimates is, there have been no it's kind of a disappointment. Coming back to numbers of TLF, Loda, I think numbers again with in line what we were estimating. So I think Loda obviously is one of the preferred bets in the entire basket, followed by Godrej Properties and Prestige.
Okay, so that's on real estate. Kunal, your picks from the sector, you have been quite constructive on this sector, and there have been days where Nifty Realty has been the top gainer, although that has been a rare sight to see in the market. Your take on some of these stocks, which one are you liking right now?
Yeah, in fact, start of the October series, if you look at the last 3 weeks, 4 weeks of price performance, sector-wise, realty is one of the best performing sector, and I think it's done reasonably well as compared to most of the other sectors. I think the second best in terms of price performance is the PSU banking names. So I think in that sense, realty has done reasonably well over the last 2-3 weeks. And from the pack, there are 2 odd names which are looking very attractive. Prestige, I think, is one of them. The stock has done reasonably well from a low which was around the 1600 mark, sub 1600 levels in the month of September towards rising around 1700, 1750 plus kind of a zone for the stock in the near term. That's a stock which has done exceptionally well and looks to be one of the stronger names so far. Godrej Properties is the other stock which I think has done reasonably well. So I think it's already up some 12 to 15% in the last couple of weeks. And the momentum has shifted completely for the stock, because earlier the stock was going through a major drag, price correction, lower highs, lower lows in terms of price patterns. But then the sudden shift of momentum has led to a completely different oriented pattern for Oberoi Realty. and the stock has moved up quite well, Godrej Properties in that sense. So I think all of these stocks have done reasonably well. The only laggard as such, or maybe an underperformer, is DLF. The stock has high potential, but somehow I think it's just stagnating. The indicators have gone into a plateaued move for DLF. The stock is just about guaranteeing around the 780 mark plus minus 20 odd range. So for the stock to get back its momentum, like what it did for the likes of Godrej Properties, etc., you need to have a strong psychological round figure breakout, like maybe an 800 mark for DLF, and then if it's led by some excellent volumes, that could be a trigger point for the stock in the near term.
Okay, so that's a take on some of the real estate stocks coming in. Aditya, weigh in over here with your view on the United Spirits versus the United Breweries. Strong set of numbers from United Spirits yesterday. It's a good show. On the flip side, when United Breweries numbers came, they looked largely weak and the stock was also under pressure. How are both of them placed on the charts, and which one looks more attractive?
Let's talk about United Spirits first. A good consolidation, rounding bottom pattern is what I can see on the stock. And yesterday's stock did break out on decent volumes. In fact, back to back, we witnessed good volumes in the stock. Stock has minor resistance close to about 1410, 1420 on the upside. If that is taken out, I think momentum will be back in the stock and then can stock easily test levels of 1600 on the upside. This entire space hasn't done well in the recent times, apart from Radico Ketan. United Spirits looks better off as compared to United Brewery. So I would definitely look at buying the stock above 1410 and look for a target of at least 1550, 1600 on the upside with a stop loss at 1370 on the downside. On the flip side, United Breweries doesn't look all that attractive to me. Rather, if anything, I think stock can see a bit of a cool off from current levels, can also test levels of 1750 to about 1700 on the downside.
Okay, here come the pre-open rates, and we will, of course, have a lot of those earnings reactions kick in. But Rahul, the other one, of course, is also the Lenskart IPO, which opens today. What's the house called? Invest or stay away?
So I think if we look at it, and I think all recent IPOs, I think the listing has done well. So I think for the listing gains, definitely one should get into it, into the Lenskart IPO. For a long term, I think I would wait.
Rahul, which basically means that you're saying that if you're playing for listing gains, you should invest, and if you are not, then wait for the price to correct further.
No, I think then you have a lot of other options which are available at a better valuations and the growth, and then the risk versus reward could be much better on the listed entity side. That's what I'm trying to say. So I think we have a lot of opportunities every day, but we've seen the frenzy in the IPO markets in the last 3-4 months. I think most of them are listing at a decent gains. So I think one should look at it for listing gains in Lenskart IPO.
What's the list of buy calls from you? Give us top 3 calls that you recommend buying into right now.
So I think 2-3 sectors have done quite well. One is, I think, the banking. So I think PSU banks remains our top bets. So in that space, I think State Bank remains our top pick in the entire thing. Secondly, I think if we look at the metal basket has done quite well, including both ferrous, non-ferrous, everything has done well. So I think from the steel space, what we like is JSW Steel. And then from the IT play, I think a lot of IT companies have just been consolidating. So we feel that mid-cap IT companies will do well. So in that space, I think post numbers, I think Coforge reported a solid numbers, what we feel. So I think Coforge, what we like. So I think these are the 3 top bets from our side.
Kunal, in fact, let's pick up on that theme, right? Because metals also is something that you've been liking a lot. If one were to execute fresh trades in any of the metal counters, which one would you recommend? And more importantly, what's the time horizon that you would recommend to stick by with these names?
See, I think as we were discussing last time, that this is I expect this to be a multi-month, multi-year upgrade for metal counters, because names like Tata Steel, etc., they don't break out and then they go back into a correction. Even if you look at 2020 onwards, or maybe in the prior bull markets, we've seen that metal stocks, they're the first or amongst the first ones to try and break past above their previous major highs, and when that happens, you see at least quarterly moves, or in many cases yearly moves happening for many of the metal counters. So I think in that sense, there is likely that the move could be a lot more extended in terms of time frame for metal counters. Within that pack, Tata Steel, I think, is one of the stronger names. Hindalco has apparently been one of the other strong charts. I think relatively also Hindalco has done reasonably well, trading closer to 840, 850 mark. Sale has been a surprise. The stock coming back towards 140 plus levels. I think day before yesterday the stock cooled off. But then I think broadly this is also a strong breakout candidate. And the biggest surprise of all from the entire metal pack is the comeback in Vedanta, because that stock has been a huge drag or an underperformer. I think there was a point where the stock just diverged itself from the entire sector, where most of the other stocks had given breakouts, but then Vedanta was left behind. But that stock has also made a good catch up. So I think from the pecking order, I would look at Tata Steel, Hindalco, and potentially even SAIL as the strong bets.
Okay, so that's on Vedanta, but once again shifting focus to the consumption space, Dabur is going to be a stock to watch out for today. Inline set of numbers reported by the company, aided mostly by GST cut and rural demand. Kanishka is here with more details on how the second quarter has panned out for Dabur. Kanishka.
That's right. Dabur has reported a largely inline set of numbers for the second quarter of this fiscal. Revenue has seen a growth of about 5.5% on a year-on-year basis to the 3,191 crore rupees level. Net profit is up about 6.5%. EBITDA has also seen a growth of about 6.5% this quarter on a year-on-year basis to that 588 crore rupees level. Margins have also seen a slight bit of improvement to that 18.4% level. Now, India FMCG business that grew about 5.7% with 2% volume growth there, whereas international revenue, they have seen a rise of about 7.7%. And now remember, about 2/3 of the portfolio did benefit from GST rate cuts, so a big impact over there. In terms of segments, oral healthcare saw about 14% growth, hair care and skincare posted mid to single high digit gains, whereas Dabur Honey, that has delivered very strong set of numbers. Double-digit growth is what we have seen over there. Food grew in double digits as well. But real juices, they were impacted by rains this time around. Internationally, Turkey was a standout for Dabur with 37% constant currency growth. However, brokerage commentary is slightly muted. Elara reduced rating, Goldman Sachs a neutral stance with a 500 rupees target price.
Absolutely.
So yes,
lots of earnings, Kanishka. Thanks for that very quick take on Dabur. Lots to talk about, and we will mark all those stocks and earnings contenders. But Kunal, before that, any mid-cap ideas?
Yes, I look at AB Capital, a stock which has done reasonably well yesterday. It's been one of the picks which I had highlighted long back also. I think looks to be attractive at current levels. Would look out for now revised targets more on the position side towards 344, stop us at 318.
Okay, and Aditya, what about you? What's looking attractive from the mid-cap end of the market?
Ashok Leyland is something which is looking quite interesting to me. After good consolidation, stock has again resumed its uptrend. So for a target of 150 on the upside, I'll be a buyer here with a stop loss at 136 on the downside.